Ashwini Gujral is also ready. Ashwini, on paper, it's a great rally. Nifty is up 1,000 points in 15 days. Sensex is sitting at the 3-year high. But do you think this is as good as it gets?
Good morning. In the evening, when you get the report card from the market, it does not consider whether fundamentals are good or bad. It only looks at whether money was made or lost. So I think, those debates are very silly in an environment where currency is getting printed. So I don't think fundamentals hold good in this market anymore, whatever the fundamentalists would like to think or say. But overall, it seems that, another 100 points, 62.30 to 62.50 is possible. Whatever short-term blip we may see on the downside will probably get bought into. But the problem arises beyond the next 100 points, whether we can continue from there. And overall, the amount that we have moved away from the short-term averages, 20, 30 day, we should sooner or later get into a correction or a reversal. So in case you are a bull, you need to have stops now placed around 59.80 and probably also take partial profits, and for the last 100 points let a small position run. Rate sensitives and economy stocks may have some more upside, while defensives like tech and pharma are likely to remain sideways. Broadly, we are overshooting the 55-6100 range like we did on the downside by 200-300 points. We are doing it on the upside by 200-300 points.
Ashwini, we've got a big event as well ahead, the RBI credit policy. Where do you think the market could find its support?
The event is only as big as the market level. Given that you already had a 200-point rally yesterday, maybe, the RBI governor will not be able to do enough to take it much higher. So chances are that by the end of the day, at best you could be, flat to down after the event. So I don't think that event is now really going to matter.
Okay, I just want to flag off the liquidity picture, because what really matters to any financial market in the short term is liquidity. Check on the FI number, and even the markets, they started gap up. Foreign institutional investors still bought into Indian stocks, and they were net buyers to the tune of about 3,500 crore, and they were net buyers, or maybe they were covering the shorts in the index market to the worth of about 3,000 crore. So we are looking at about 6,000 crore. That's about $1 billion of cash and F&O, money which came into Indian market yesterday after a gap up start. So it's a brute force of liquidity which one should not challenge. Ashwini, markets will rally if liquidity comes, markets will reverse if liquidity goes. There is no way one can put a finger on liquidity. But do you think somewhere it is time now to buy protection? Like you famously said 1 month ago, it is time to take cover?
Well, if not take cover, at least, take some profits off. And obviously, once the market has given you 20% in 1 month, that's huge. I mean, that does not happen even in 1 year sometimes. So definitely, profit booking must be done above 6,100. And I'm sure that this is a phase of the market, and any market which has gone up so vertically, chances are at the whiff of first kind of bad news, it will collapse equally swiftly. But for the moment, it's risk on. So just protect your profits, because this market can take them away fairly quickly, and if 2 months from now you are at 5,100, I don't think anything much would have changed even then.
Ashwini, what is it that you sense for the currency though? A significant amount of strength coming in yesterday, but how do you think it would play out today?
Well, 6150, 6200, 61.5 and 62 on the currency remains a fairly strong support. Now, it's possible that because of this money inflow, etc., that may get breached. But overall, currency remains in a fairly strong long-term downtrend. So even if you do get, 59, 60 because of some great inflow, I think the logical level is for the currency to slowly move towards 69.70 over a period of time. I don't think this kind of appreciation will stick. Obviously, we had depreciated 30%, so that was a bit overdone, so that is getting corrected. But the trend of the currency remains on the downside.
Let's look at individual stocks and which are some of the key individual stocks which should be on your radar and which are on Ashwini's radar. Ashwini?
Well, Nifty for the day needs to stay above 6,099, resistance at 6158 and 6201, support at 6056 and 5997. Bank Nifty needs to stay above 11,117. CNX IT needs to stay above 8155. BTST from yesterday, Asian Paints was a buy with a stop of 478, target of 501. Tata Steel was a buy with a stop of 305, target of 322. Reliance Communication is a buy with a stop of 157, target of 172. Fresh calls, Coromandel is a buy with a stop of 220, target of 245. Larsen is a buy with a stop of 875, target of 915. A Birla Novo is a buy with a stop of 1225, target of 1285. PNB is a buy with a stop of 540, target of 585. SVI is a buy with a stop of 1750, target of 1900. Tata Power is a buy with a stop of 78, target of 92.
Okay, let's also bring on board Mitesh Thakkar to talk about his views on trade. Mitesh, while the bulls retained their hold on the markets yesterday, what do you think is going to happen today? Because looking at the global setup, it seems like today we're going to consolidate.
Good morning. See, I think, 6150, 6190, I did mention those levels a couple of days back and yesterday as well. I think historically on the longer term closing charts, which is the monthly closing, etc., I think, are very important areas where when the market has kind of failed to have a monthly closing above 6,200. I think these are levels wherein supply will emerge. But if I look at the overall scenario and the way the charts are shaping up, I think individual stocks still offer a lot of hope and suggest that the trends which have developed in the last few days, few weeks, I think are very strong. So what might happen is that there could be sectoral churn happening in the next few days. We will see individual stocks, individual sector come into flavor with some kind of news flow, and the other sectors might kind of take turn to go through their own corrective pullback or profit booking to their short-term averages. So it could be very, very stock-specific market. Broadly, I think that 6190, 6200 on the upside should in the short term be a ceiling. If we start getting past 6200, we would be, or I would be extremely positive again. And I think on the downside, around 5950, 5940 should act as good support areas.
Of course, it was all about financials yesterday, but because today the credit policy is due within the financial group, I would say the most important group to monitor would be banks which are dependent on wholesale borrowing. And if Reserve Bank of India, they decide to really reverse some of the recent tightening measures, then banks like Yes Bank, IndusInd Bank, ICICI Bank, they will gain because they are dependent on the wholesale end of the market to borrow money in order to really raise capital. Ashwini, what is your take on Yes Bank, IndusInd Bank?
They've had large rallies. I'd be very surprised if immediately they are able to move a lot higher. So if you did get into Yes Bank 100 rupees lower, you are getting to levels where profits should be taken, if not all, at least partial profits. But basically 420, 430 is that region where Yes Bank should find lots of resistance. And similarly for IndusInd Bank, probably closer to 475, 480 is the level where it should find resistance. But the way banks have moved up, they are getting into a zone where incrementally risk reward is not in your favor.
Mitesh, how would you go about approaching the Bank Nifty today, considering it can get a little bit volatile ahead of the RBI policy?